There are moments in the market when two tiny companies each trading under just $3 begin making moves so strategic and so unexpected that early investors who catch them at the right time can change their entire financial future. And right now, two little-known Nasdaq stocks are positioning themselves in ways almost no one is paying attention to, but they absolutely should be. This video is for educational purposes only and not financial advice. Always do your own research. If you love uncovering powerful early opportunities, hit that like button. It motivates us to bring you more valuable insights every day. Something unusual is happening in the market right now to completely different industries: global cannabis and healthcare. Technology are experiencing quiet but meaningful momentum shifts, not because of hype, not because social media is pumping them, but because these companies have begun making decisions that fundamentally change their long-term outlook. One of them just made a major international acquisition, something no other U.S. cannabis company has been capable of. Pulling off this year, signaling a commitment to profitable global expansion at a time when most competitors are cutting costs and retreating. This single move has the potential to reshape the company's financial profile almost overnight. The other company operates in Medicare Advantage, one of the most powerful, most profitable sectors in the U.S. healthcare system. But after years of struggle, this company is finally showing real signs of stabilization. Not in theory, not in hype, but through hard financial data. Membership growth, margin improvement, and early profitability signals that analysts have been waiting a long time to see. Here's what makes these two stocks especially compelling for early investors. They're both trading under $3. Yet both of them are tied to industries worth tens of billions of dollars. And in both cases, the companies are moving in directions that could genuinely surprise Wall Street in 2025 and 2026. And the most interesting part is that the market hasn't priced in any of this news yet. So let's begin with the first company, one that just made a massive strategic move in Europe that could redefine its entire future. The first company is CRON Group, ticker CRON, currently trading at around $2.69 per share. And CRON has just made one of the biggest international cannabis moves of the year. Just days ago, CRON announced it is acquiring Cannabis BV, the largest adult-use cannabis operator in the Netherlands, official pilot program. This is a confirmed $67 million cash acquisition, and it's one of the most strategic deals CRON has ever executed. This news is huge for several reasons. First, the Netherlands is launching one of Europe's first fully regulated adult-use cannabis programs. And Cannabis isn't a small startup, it's the biggest operator in the program. Which means CRON just bought itself a dominant market position on day one. Second, the acquisition is profitable on day one. Cannabis reported $28.2 million in EBITDA in the 12 months ending September 30th, 2025. CRON isn't buying hype, it's buying a revenue-generating business with real operational strength. Third, CRON used cash, not debt. This is only possible because CRON has one of the strongest balance sheets in the cannabis sector. While competitors drown in debt and dilution, CRON is expanding internationally with cash reserves that give it massive strategic flexibility. And finally, this acquisition positions CRON for the next wave of global cannabis legalization. Whether U.S. reform happens soon or not, CRON is building a global foundation that doesn't depend on American politics. This is the type of move investors look back on and say, how was this company only $2.69 when that deal happened? A move from $2.69 to $6 or $7 is not unrealistic if fundamentals and legislation align. That valuation would place CRON's enterprise value to sales ratio back in line with early-stage profitable international cannabis peers. This isn't hype, it's simply CRON returning to a standard industry multiple if the global expansion thesis plays out. Now let's move to the second company, one operating in a very different space but making momentum shifts that analysts have waited years to see. The second company is Clover Health, ticker CLOV, trading at around $2.59 per share. And for the first time in years, Clover Health's turnaround is looking real. In their third quarter 2025 earnings, released last month, Clover announced positive adjusted EBITDA profitability, year-to-date, 35% year-over-year membership growth, improving medical loss ratios, stronger operational efficiency, and healthier financial management. This is exactly what a successful Medicare Advantage turnaround looks like. But the most important part is the progress of Clover Assistant, their AI-driven clinical support tool. New data shows Clover Assistant is correlated with fewer hospitalizations, better health outcomes, stronger preventive care, and improved management in underserved communities. Clover is proving that technology plus healthcare outcomes equals financial improvement. That's the formula Wall Street wants: growth, profitability, and real clinical value. For the first time, Clover isn't trying to grow recklessly. It's growing responsibly, strengthening its financial foundation and demonstrating that its technology actually works. This is what makes the turnaround real, not projections, not promises, but measurable financial and clinical results. A move from $2.59 to $5 or $7 is achievable if revenue growth continues and margins stabilize. That price range would reflect a price-to-sales multiple similar to established, profitable Medicare Advantage companies. Clover doesn't need miracles, just needs to perform at industry-standard valuation levels. So, which company is right for investors? CRON is ideal for those who believe in global cannabis expansion and international regulatory momentum. Clover is ideal for investors who prefer operational turnarounds, strong financial improvement, and healthcare technology with real clinical outcomes. Both offer asymmetric upside due to their low share prices and strong new catalysts. Two companies, two different industries, yet both share something in common. They've been underestimated. They've been written off too early, but they are quietly rebuilding their foundations in ways the market hasn't fully recognized yet. CRON is expanding globally with profitable acquisitions. Clover Health is stabilizing financially with real operational improvements. And if things continue on this trajectory, these two stocks each under $3 could become some of the most surprising comeback stories of the next market cycle. If you want more powerful deep dives into US stocks under $10 and under $5, make sure you like this video, subscribe, and turn on notifications. It truly motivates us to bring you the most valuable, latest market insights every single day.